All right, everyone, here we are with ticker symbol HYLN, Hyliion Holdings Corp, also known as previously to the merger, SHLL, Tortoise Acquisition Inc. So, Hyliion currently is actually in a bearish trajectory, right? It's been like that for some time. For all my first time viewers and investors, I've been talking about the highs that it reached, and we've been looking back at support levels that I talked about previously at $33. Then we also talked about the one at 28, and we talked about the one at 25, and this would see newer lows. And then we also talked about the one recently at 22 and some change, and it's actually broken through it slightly. Now the next one would be way down here, close to $19 and $20 range, anywhere from like $19 to $20. So 1980, 1950, give or take, all the way up to $20 is our next support level. We would have to zoom in and see that clearly, but it's around that range. And right now, something that I find interesting today is that volume actually has slowed down. So we're at 3 million in volume, which means that there's not a lot of trading going on for this stock. So Hyliion is a little bit quiet, and something that is significant here is, yes, it got quiet, but it slowed down its trajectory in a downward direction. So bulls have appeared, and they've actually been able to kind of level this off and stop it from obviously falling in a much more steeper direction down. So it's actually kind of been bouncing around, trying to hold itself up. That's a good sign with volume, and also for investors that there could be a turnaround if the bulls come in hefty and strong. So they have to come in hefty and strong. Now, right now, what they've done is they're able to go ahead and level it off. But again, they need to load up on stocks to bring this back up. The 50-day moving average is actually catching up to it, giving a chance for the bulls to actually break through it and actually reach newer resistance levels. But let's go ahead and look at our new support here based off of the last couple hours of the day. And then we're going to also talk about this a little bit broader and a little bit more stretched out within what the chart is showing. So one of the most important things, like I said, after the $22 mark, since we've slightly broken through it, it was way back here, and you can actually see it was right up here at about 22.80, and right now we're currently at 22.56. There could be a turnaround. That's just a slight difference of 30 cents. But if the bulls aren't able to bring that back up, the bears are going to continue to tear this down and work their way closer to that $20 mark, all the way down to around 1950. And if 1950 gets broken through, which is a lot further from 20, this could be well on its way, again, to newer support levels and newer lows. But right now, like I said, it's gotten a little quiet, and the bulls are actually trying to kind of hover this back up and stop this from just going in a downward direction. And it's kind of gone in a sideways direction right now. If you kind of look at it and you pay close attention from this steep fall all the way till now, it's been kind of hovering, and then a slight fall, hovering, slight fall, hovering, and now a slight fall. And it's kind of just sideways right now. I mean, I know it's going a little bit lower every time, but it's a lot slower than this decline that we've been seeing for the last couple of weeks and since the beginning of October. Now, we're going to look at our new support level and resistance level, but the most important thing is the 50-day moving average. 50-day moving average is 24.47. I'd write that down. As long as we're below it, the bears are in control, and the moment we cross it, the bulls are starting to gain control, to get up deeper into bullish territory and hit newer highs. Now, before the bulls can even get into bullish territory and cross the 50-day moving average, they need to cross the first resistance level. This resistance level is 23.58. They need to turn that into a support and break away from it. Now, keep in mind, this does not signify that the bulls have gained control. This is an indicator for us investors to know in which direction this is heading, and if they can turn 23.58 into a support and pull away from it, they're getting closer to their goal of breaking through 24.47 and getting back into bullish territory. So super important to keep that in mind. But the first step is breaking through 23.58 and turning that into a support. On the other hand, we have what the bears want. And the bears want to continue to tear this down. They're trying their best, pull it further away from the 50-day moving average in a downward direction. And the first step to doing so is breaking through the first support here at one of the lowest points within the last couple of hours of the day, which is 22.52. Now, if 22.52 gets broken through, it's really important, but I also want you guys to pay close attention to the lowest point reached in this bearish run and in today's bearish trajectory of 22.36. That's another important number to keep in mind. But from the moment it crosses 22.52, I would actually emphasize pay close attention to the behavior. Don't wait till 22.36. That's just another point of reference if you're willing to hold through that. But 22.52 is a very important number because we're already in bearish territory. We've been in it way back here since October 16th, and this has continued to hit newer lows. And if it breaks through 22.52, it will pull it further away from the 50-day moving average, giving more leverage to the bears to continue to hit newer lows and newer support levels. Now, with these cues, I hope that you guys are well prepared for tomorrow's trading day. And if you feel inclined or encouraged to subscribe, please do so. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community. And don't forget to hit the like button to let me know you watched this video. At the end of this video, there's going to be a pop-up video. In that video, I will be discussing about the S&P 500 index and how it's been rising several points on scheduled dates. Now, these scheduled dates are the dates that the Federal Reserve is pumping the markets. The charts show it for themselves. I show the dates. I go into more detail about it in the video. I highly encourage you guys to click on it and check it out. But just to kind of summarize it, the S&P 500 is rising on these dates. And what does that mean for us as investors? Well, if the S&P 500 index is rising, there are individual ticker symbols rising up with it. They're rising anywhere from 30 cents to $3 per share. I know it doesn't sound like a lot, but per share that does add up. And like I always say, if you put $1 into the market and you got $2 back, you've done a great job. That's what we are here for. We're trying to make profits, put in initial investment, and get more than what we initially put in. And that's what essentially this strategy shows, how to maximize profits and minimize losses. Now, it doesn't guarantee you profits. I'm not there to tell you to buy, sell, or hold anything. You have to do your due diligence and your research, but I am here to enlighten everyone on something that a lot of investors are unaware of or are overlooking, and the opportunity is there. While the Federal Reserve continues to pump the markets, whether it's going down or it's going up. Check out the video. It's very informative. If you're a first-time viewer, I highly encourage you to check that out. And if you feel encouraged to subscribe, then do so. And don't forget to click on that bell. Share this with everyone that you know. And thank you guys so much for watching. And let's make some money.